Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education.
Hey guys, it's James with the Chart Guys. It's Tuesday, April 25th. Going to do my nightly video on gold. So yesterday, bulls bought the dip here on the back test of the 20 MA, and admittedly, I thought that we would continue potentially bullish or continue in a range here. But with the strength of the US dollar, Japanese yen, gold pulled back again today, and we have a TCG bear cross. Again, TCG bear cross when the 4 EMA crosses under the 8 EMA, green under the red, and we lost this 20 MA or middle Bollinger Band daily support here. And the last time that happened, you can see that we had some more pullback here, so I would be wary as a gold bull at this point. And look at the next price resistances, supports here. Of the high of this candle is going to be 1260.90 as the next daily support we're going to look at. If we lose that, then we'll start looking at these lower wicks at 1248.20 and 1245.40. As far as the weekly chart goes, we are still in a uptrend on the longer term time frame with this big pullback on this bounce. You can see that we had this high, we have a higher low from this low and another higher high, and as long as we stay above the high, the low of this candle of 1194.50, then we're still going to create a higher low here. So on more pullback here, we'll watch for the 20 MA as it moves up here to provide potential support. And on the weekly charts, the next price support here we're going to look at is the high of this candle here. The high of this candle is at 1261 as far as the weekly goes. And you can see that the US dollar is weak. That the US dollar is weak. Continue to set on the daily these high, low, lower high, lower low, lower high, lower low. But as you know, gold tends to follow US dollar, Japanese yen better, and you can see that right now we have this huge green candle here with the bull showing up. We have a TCG bull cross 4 over the 8 EMA. We're regaining the 20 EMA here, and the 4 and 8 EMA are both about to cross. The 4 EMA has already crossed the 20 MA, and the 8 EMA is about to cross. And what we're going to look at next for resistance here is going to be 111.57, and as long as we pull back before 111.57, that's still going to be a lower high pattern and lower lows. And you can see on the weekly, if we zoom out more on this US dollar Japanese yen, the trend is definitely bearish recently. So we have, you can see this pullback, we have this lower high, we have another this low, a lower low here. And so as long as we stay under on the longer term time frame 115.50, we are still going to be in a downtrend on the US dollar Japanese yen. As far as the miners go, obviously ABX earnings really hurt the miners. Senior miners, get the daily, and as you can see, my past videos, I said 50 MA was one strong resistance, became strong support. You can see it held. And now again, back testing after losing it and rejecting there and further downside. The next supports we're going to look at on the daily here are going to be the low of this candle here. Sorry, the high of this candle here at 2189. And we definitely don't want to lose 2114. On the weekly chart, it looks potentially like we could be in an equilibrium pattern of price discovery where we have low, high, higher, low, lower, high, and range here until we find price discovery, as long as we keep that low that I mentioned of this low here of 2114. And what we could look for on the 4-hour chart is, you go back in history and you see the 4-hour chart and the RSI being this low, oversold, you generally tend to get a bounce. So we had a nice bounce here, had somewhat of a bounce here, then continue to consolidate in a range. we had a really nice bounce here. And here was the one case scenario that we don't want to see is big red candle like today. You consolidate overnight and then dump, consolidate, dump, continue that stair step down pattern. And so on this 4-hour chart, to break that trend and to know that this is more than just an oversold bounce on consolidation and further dump, what we need to do is start setting higher highs on this 4-hour chart. And so the resistance we're going to look at to set a higher high at this point is going to be the high of this candle here at 23.44 on the 4-hour chart. If we lose the low of today of 21.95, then red flag, as we may be in a consolidation dump pattern. And you can see we've already been doing that pretty much. Dumped here, pulled back, consolidated, more pullback, consolidation, and further pullback. And so to change that trend, we're going to have to take out that trend. You're going to have to take out a higher high and form a higher high here on this 4-hour chart. The hourly chart is also oversold. Again, wouldn't look for anything more than oversold bounce. We did break above the high of this candle here, resistance at 22.28. What we want to watch for tomorrow on the hourly chart is a break above the high of 22.62 and potentially take out that lower high pattern and form higher highs on the senior miners. GDXJ, same scenario. Look at the daily, obviously much weaker as we've already broken a lower low here, and so it's in a much weaker pattern than the senior miners. It's been that way for a while, and you can see that the weekly is already broken to a lower low as well. And really the last support we have on the weekly that is a must hold here is a 27.37 candle at the low here. So GDXJ, same thing on the 4-hour chart. If you look at the 4-hour chart and the RSIs, see that we've had nice bounces off these oversold, at least some. Here bounced, here we had a bounce, here we had a bounce. And so we'll see if we get another bounce here. It's just a matter of how big that bounce is going to be, how significant, and for how long that bounce is going to be for. And again, same thing here. You can see that we've dumped, consolidated, dump, consolidation, dump, consolidation, dump some more. So what area we need to take out is the high here of 34.09. And if we do take out that 34.09, we're going to be in that gap fill area. And one thing to also mention in these miners is on the daily chart, we do have 2 gap downs now. On the senior miners and the junior miners look the same. We have 2 gap downs. And a third gap down could potentially look for short-term bounce regardless if there is a third gap down tomorrow. 3 gap downs usually signal a trend change that where the bears will exhaust themselves and not be able to continue to push put downward pressure on the price until there's some type of bounce. So look for potentially a third gap down. If there is a third gap down, look for a short-term bull entry. And again, look at that 4-hour chart for the RSI bounces to set and break that trend of lower highs and lower lows. Have a good night, and I'll see you tomorrow.